Hey everybody, and welcome back to LAGFOREX. It's James here today. I've got a brand new video for you guys in this Learn to Trade playlist. So today we're going to be going over something called inducement and momentum. So what is inducement and momentum? This is a process done and performed by the smart money operators, and it quite simply involves inducing your technical and dumb money into the market, into positions, by building liquidity points and misleading them about the future trend before they come and manipulate these people out the market. And this is done so by injecting momentum into the market, further misleading the public, whilst also gaining the best possible price for that buy or sell position before they bring the momentum in, reverse price, and take it in the opposite direction. So in front of you right now, you will see a live example of this on the euro to US dollar market. I have labeled this up, and I'm now going to run you through exactly how we see inducement, and therefore we see the injection of momentum in this market right here. It's also going to include my predictions for this market moving forward. So straight away, anybody who's been watching this market, you know we have been trending downwards. We have been putting in bearish structure over and over again for quite a while now, for at least a couple of weeks. So to anybody who's been watching this market, you know that we do have a bearish bias moving forward. We do want to be a seller in this market because we still haven't reached a valid point of interest of demand below price as of yet to cause a reversal longer term. So we are still expecting price to be bearish moving forward. Regardless, this is the price action for the first few days of this week. So after this area here, this was my inducement. So what that means is that we signified a continuation of the move down. So we built liquidity. We created many equal highs, many wiki rejections from this area. And straight away, we're thinking that this is a very valid level of supply, evident by the fact that price is so hesitant to push up. We think that in this area, supply is that dominant that price has to move down. To any technical traders, they're saying, okay, we've got a clear level of resistance being introduced into the market. This would be a great area to try and sell from, continue this bearish move down. That's simply what inducement is. It is a liquidity point. To anybody who's been watching some of the other videos I put out, you should know what a liquidity point is. It's an area of many equal highs or equal lows, and what that does is it induces people into the market because they're looking at that area as a support or resistance. They're wanting to sell or buy from that area. We therefore have a very concentrated area of stop losses in the market. So what do the smart money operators want to do? They want to blow price past that point of liquidity, take people out of the market, get the best possible price for their positions, and then reverse the market and finally continue with the move that they had desired from the start. So, as I said, in this area, we've seen this exact thing happen. We've had that inducement in this region here. The other thing to add on top of that is this has happened inside a point of interest. So our last buys before the heavy sell-off began, this was a supply zone that we were looking to get in on sales from. So what's happened is we've created that liquidity. We have induced sellers into the market. So many people from this point have activated those sell positions. They would have put their stop loss just above this line. And then as price trades down, we're still showing a lot of hesitance, a lot of supply being in the market. There's definitely signs of that. And then as price pushes back up, we see that as it takes that impulse up, we see again that rejection. Price really does not want to move up. There's too much supply in that market. So we continue moving up. Again, more rejection. And then finally, we have that high volume candle that blows through this region. It completely disregards the fact that there is so much supply in the market that was once pushing price away. But this candle has so much volume, to anybody who now sees it, thinking, well, now demand's dominant. But that is not the case. All this is It's like our needle. It is injecting momentum into the markets. It has many purposes. I'll run through those now. So the first thing I said, evident by this text here, is it clears the liquidity from the market. We know that there are many stop losses above this, so it is taking early sellers out of that market altogether. So the second purpose being is that the smart money operators know they want to bring price down from here, and they could have got in on sell positions here. However, when they bring price back up, this is the highest possible point before the reversal. So imagining that most people got in on their sell positions here at 1.12517, but they're getting in on their positions at 1.12551. So it may not seem like a lot, but they're still gaining an extra few pips than everybody else in that market. They're gaining the best possible price for a sell position. Now, the other thing is, as I touched on just a little bit, is that because we introduce volume and we break that area, we now know that technical traders are looking for a break and retest. They believe that the buyers are now dominant in this market, that a bull run may be coming, because looking at this area structurally, even though we were expecting after this consolidation for price to move down, this is our protected low of this region so far. And this move, as you see, it doesn't come to surpass that low. And therefore, what people could be thinking is that we haven't been able to put a lower low in the market, and we're actually ready now to reverse the trend and maybe start putting in some bullish structure. So that's the other thing. It misleads people again into believing we may have some bullishness moving forward. And then finally, it injects momentum into the market to give the market enough supply. So supply in this case, sometimes it may be demand if we're doing it on the flip side, but it is injecting enough supply into the market to make that down move possible. So typically what we see with this injection of momentum is it's going to be a high volume push up through that liquidity point, followed by a high volume push straight back down. Now what this is signifying to us is that because we've had that high volume push up that's had no reason to have that amount of volume due to the supply that we have in the market as of current, we know that the smart money operators, this is them being present, this is them activating a buy position to take price to where they want it to be. So as I said, they desired this area because they wanted to blow that liquidity point. So what they've done is they've activated a large buy position to bring price through that level, which is done. And then straight after, as I said, they get in on those sells at a very, very good position at the best price possible. And because they know now that the market is going to move down, they're going to open a very large sell position to profit from that move. So straight after we've seen that, we have an even higher volume candle on the flip side. So in this case, an even higher volume bearish candle. And that has caused this entire move down. And this was only possible because we've induced people into the market at this area, and then we've injected that momentum. The smart money operators are now present in the market. They've brought the momentum, the volume, the volatility that we now need. And this is the exact point where we want to be a seller in this market. So we have to watch out for these things happening. And typically what's going to happen is this injection of momentum should bring price far enough up to mitigate some form of point of interest. So as we've done here, we've built that liquidity, we've induced people in the market. This injection of momentum's pushed through and mitigates this position within that last buy before the sell-off. So moving forward, again, we've had smart money presence, as we've just stated, in this region of injecting the momentum. So moving forward, I know that the smart money operators have in fact opened up buy positions in this area that may still need to be mitigated moving forward. So this moving forward in the market, it's going to be my supply zone. I'm going to expect that price is going to slowly trade back up, mitigate this area, and then decide what it's going to do from there. Considering the fact we want the market to continue bearish, I will assume that after the mitigation, it will take that move lower, and I will be looking for entry confirmation to be a seller from this move moving forward. Just extra evidence of this happening is the fact that down here, we've started having the flip side of what we're talking about. We've started having that rejection in the market to the downside. Demand is being introduced. So the momentum that we injected is now running out, and we therefore need to inject more back in. And we need a reasoning to do that. So exactly what happened last time, we did it at a point of interest. We built that liquidity and then had that injection of momentum. And as I was saying, that's the exact same thing I want to happen here. I would like price to slowly trade back up to this region. The reason I want it to do it slowly is because throughout that course, because we're building so much structure within this region. So if I use the brush tool here, if we were to just have a straight one impulse, a correction, and then we come into this region, we have our inducement, our injection momentum, and then blow it. All we have here is 2 liquidity points. Okay, so these are 2 regions within that move up that people are going to have their stop losses at, so therefore going to be a concentrated area of liquidity. We only have 2 points. Now, if we were to actually do so more slowly, like we have done here, and you actually see the structure we're putting in place, we have so many more liquidity points. You know, we have like double the amount of what we already had. Now, what this means is that when we do inject momentum, hopefully to the downside, we have a lot more liquidity to run because price has taken that extra time to slowly trade back up to our point of interest. We have introduced more liquidity in the market that can now be ran. And all this means is that when we do get that movement lower, it will just have even more momentum, and we can therefore get in on an even more volatile sell position. So moving forward, my prediction for this market is that you probably want to be a seller. This is just my advice that I have gained. This is the bias I've gained from my analysis. This is to be taken with a pinch of salt. This is not investment advice, just my opinion of what this market is going to do. So take this information I've provided into your own analysis. Do not look to take trades solely from what I say. As always, do your own analysis, practice on a demo account, and when you are profitable, that is when you should move onto using your real funds. We have a brilliant risk management video on the LAGFOREX YouTube channel. If you go into the Learn to Trade playlist, Luke made us a great video on everything there is to know about risk management, calculating your lot size, risking a certain percentage per trade. Make sure you check that out, because if you want to be a successful trader, that is the #1 rule that you have to keep in mind. It's going to set you aside from those people that blow their accounts and from those people that manage to compound them into being multi-millionaire. So that's going to conclude this video. It was only a quick one, but I just wanted to explain this topic to you guys. I wanted to explain what inducement and momentum is. I'll be using this concept as we move forward with some of my videos, with some of the Learn to Trade and analysis videos. So make sure you are familiar with this topic. And as always, I hope you have enjoyed this. Any feedback would be highly, highly appreciated. Leave a like if you enjoyed the video. Please leave comments. We like seeing how people felt about the video. Any criticism is welcomed. We always want to know what we can do to improve. So do not hesitate to leave in some of that in the comments. But as for now, that is the end of the video. Thank you for joining me today, and I hope to see you in the next video on the LAGFOREX channel.